All right, good morning and welcome everyone to our free training today about reverse mortgages, the essential wisdom for notaries. My name's Bill Soroka. I'm your host today with my wonderful friend and certified reverse mortgage professional, Nina Penny. We're going to do probably a more formal for us is still pretty casual, but we'll do a more formal introduction here in a moment. But I just want to set some expectations for today's calls. First, as I usually do on these things, I do request that you turn your cameras on so we can see your smiling faces. Again, if you're not in a position to do so, we understand. There are notaries from around the country on today's call, so I highly encourage you to use events like this to connect with each other. We all need to build our peer network that you can lean on for support, education, and referrals, especially if you're doing loan signing work, apostille work, fingerprinting work, trust work. All of these are going to rely on your network. So use your calls like this, your training calls, to connect with each other. So try it in the chat function. Please say hello, introduce yourself, and tell us what state you're hailing from. Let's see if this chat function is actually working today, because Linda's the only one with a camera working besides us.
I saw that. I was going to say, Linda, thank you.
Yeah. Jennifer from Ohio, thank you. Delaware, thank you. Tina's playing too. All right. Linda's in New Jersey. Yep, totally understand. Kim, all right. Awesome. Thank you guys for playing in the chat. I'm going to go ahead and start sharing our screen because we do have a presentation for you today. Here we go.
Temecula.
All right. Got our California. There's Maryland,
I love
Tennessee.
California.
Yes, convenient. All right. So if you've ever completed a reverse mortgage loan signing appointment, would you just type a one in the chat for me? And then type a two if you've never had a reverse mortgage signing. There we go. Good little mix there, Nina.
Yeah.
For me, these reverse mortgage appointments were often among my favorites. They definitely took longer. I definitely had to print a lot more paper. I know some of you that typed a one in the chat, you can relate to that. But I absolutely loved working with these particular signers, and not to mention the passionate professionals that work within the reverse mortgage industry, including Nina. And I'm thrilled to be able to share these reverse mortgage opportunities with you today on this presentation we call Reverse Mortgage Essential Wisdom for Notaries. Now, what you're going to learn today is that this is pretty broad training. And we're going to include first some information about the senior demographic and why it's worth your attention right now for lots of different reasons. But one of the main ones is reverse mortgages. And then we're going to share some of the problems and even the crisis that many seniors are facing right now. And we'll describe exactly how reverse mortgages help solve those problems, which is why so many financial advisors and professionals use the reverse mortgage loan product as a solution for their clients. And because this can be an intimidating topic, my friend Nina here, she's a subject matter expert, is going to walk you through and have some fun explaining exactly how reverse mortgages work in the first place. We'll even go into a little bit of the history to see how they had once had a pretty negative reputation and now have overcome that through consumer protections and regulation. And then, of course, the best part is we'll explain exactly how notaries like you can be really a beacon of light in this process, helping more people, which we love to help. This is one of the most helpful communities I've ever been a part of. And of course, earning more appointment or earning more per appointment through reverse mortgage loan signings. We'll also show you what to expect in these appointments and why you can make such a difference. And at the end, We'll share with you Nina's very popular certification program, and it's housed in High Performance Notary. So I'll show you how to join that community for free. And if you're interested in getting certified as a certified reverse mortgage signing professional, we'll make that really inexpensive and easy for you today. And then we'll open it up for Q&A. So if you have any questions about how these loan signings work and how or where to get business, or maybe you're on today's call and you're wondering if maybe a reverse mortgage might be right for you in your own situation, or maybe for your parents. We have Nina Penny right here, so you can ask those kinds of questions. So let's go ahead, jump in, and get started. My name is Bill Soroka. I started out as a loan signing agent, like so many of you. I screwed up pretty bad along the way because I didn't know what I was doing. And then I was completely inconsistent with my marketing. So my phone often went quiet, and I almost went out of business a lot. My mobile notary business was almost my 27th business failure, but then something happened. Instead of resisting consistency through habits and routines, I started embracing habits and routines. And I started my daily dues, which was simply reaching out to prospective clients every single day. And things really changed and turned around for me. I went from scraping by, I'm barely making $1,000 a month, to easily clearing 20, 30, $40,000 a month. And then I packaged that exact system up. I created a course called Sign and Thrive. I wrote a book called Sign and Thrive. And then through that and other programs like the Certified Notary Trust Delivery Agent Program, the World of Apostees Certification Program, and the Certified Reverse Mortgage Training Professional Program or Signing Professional Program, I've taught thousands upon thousands of notaries how to build a business that thrives with loan signings and beyond loan signings. And one of the amazing teachers that have helped make all of that possible is Nina Penny. And she's going to lead you through most of today's training. Now, I met Nina at a reverse mortgage signing where she was the loan officer. And this was my very first loan signing or reverse mortgage signing. So I was so freaking nervous. I had no idea what I was doing. But I did know how to dance around a loan signing. I understood customer service and how to connect with signers. And I knew I didn't necessarily have to understand every single document to be good at this. But the real gift of this particular appointment was that Nina Penny was there. She cared so much about her clients and making sure that everything went smoothly and efficiently that she actually showed up to that appointment and without judgment helped guide me through the process. And after that appointment, we actually had a couple more. We stumbled upon each other again and eventually struck up a friendship. And this is us on one of our vacations together in Palm Springs. And of course, Nina fell victim to my two favorite words. What if? And I told Nina that these reverse signings were so intimidating, that they're so misunderstood in the notary community, as well as the rest of the country, even the signers, and even some of the people who sell them don't fully understand a reverse mortgage signing. But what if we could create a training program that helped elevate the reverse mortgage closing experience? What if the notary knows exactly what the product is and how to navigate the documents and help these appointments close smoothly and efficiently? So everybody wins. And she said yes. And since that fateful date in 2017, she's helped teach thousands of notaries how to embrace and understand reverse mortgages and the customers that come along with them. And that's Nina's passion, which is what I admire most about her. Once you work with her, you'll see why her clients love her and why she strikes up lifelong friendships with many of her signers and her clients. So if you would please help me show some love for Nina Penny in the chat. Can everyone just say hi, Nina, and welcome her?
Bill, did you just freeze on me?
I think it's you. Right when I bring you up.
Bill, was that you or me?
I think that was you.
Oh,
But you're back now.
I'm back.
But don't worry, you looked great when you were frozen with your eyes closed. So Nina, I was just turning it over to you, so you could do a little more of an introduction about you. There's all everyone's saying hi in the chat. I'd like to just talk a little bit about your experience and what you love about this market.
Um, well, first of all, thanks for spending your Friday morning with us. I really appreciate it. Hopefully, you'll get something great from this time that we'll spend together. I started doing reverse mortgages in the early 2000s, and it was really interesting. I had a friend of mine, I was doing traditional loans, forward loans, and he said to me, you know, my wife wants reverse. What do you know about it? I said, nothing. Let me do some research on it. And I was doing research, and he would call me periodically and say, Nina, what do you got? I'm like, I don't know. I can't really find anything wrong with the product so far, but let me keep digging. And so I kept on digging and digging and digging and digging. And he called me again. Nina, what'd you find out? What's the downfall? I said, I really can't find one. I said, I would really suggest your wife go through with it. And he said, oh, she's already in the process. So I had done all this research on the product. And a friend of mine said, you know, now that you're almost an expert on it, you spend so much time researching it, why don't you just add it into your book of business? And I did. And I loved demographics so much that I actually started in about 2007, 2008, trying to convert all my business to reverse. It took a while, but I was able to do it. And ever since then, I've been doing reverse. I love my clientele. I love the seniors. I love the notaries that come that love to be there and share the experience with me. And in 2017, I think the year I met Bill, I think, I also earned my designation of a CRMP. It's about 180 in the United States. Most of them are not producing loan officers. They work for lenders. Like behind the scenes in the banks, I am producing CRMP, which is kind of unusual. And so I love the product. I love teaching people about the product. I love dealing with the clientele, and I absolutely love the notaries that come on board and learn about it. It's a great time.
We love you too, Nina.
Thank you, Bill.
You want to tell us about the growing senior market?
Well, more and more people retire every day. I mean, the numbers are like 67,000 people turn 65 every day. That's a lot of people. A lot of people retire, you know, growing when you work, right? You're accruing money, and that's the easiest part. When you retire, now you're going to turn from growing money to spending money, and that's a very difficult part. Most people have more home equity than they do in their retirement plans. And more people are learning that maybe they have to move in retirement years to a home that's a one story from a two story. The market for seniors is growing.
And some of the challenges that they're facing today.
Well, of course, not having enough money to retire. You know, we don't know how long we're going to live. So, how do you know how much money you need? You can never have enough buckets, as some people call it, of money to help cover through the years that you'll be living. Like I said, once again, a lot of people you see go back to work because they have to. Long-term care is another issue. You know, a lot of people could not afford long-term care when they were younger. And when you turn about 50, long-term care is almost not even possible. It's so expensive. Aging in place. I've had clients that want to pass in their home, that love their home, that want to stay there, but their house is not willing to accommodate them for those years. And then, of course, there's the house rich, cash poor people, which people think, you know, I have all this money tied up in my house, I have no money, and, you know, what do I do? Everything's too expensive. I'd like to add a new one in, Bill. Can I?
Yeah, heck yeah.
So, in the last 3 months, I've had the pleasure of being very busy, but I've also had a very sad experience as well. Consistently, the last 6 clients I've had have had over $100,000 in debt. And that's not mortgage debt. And a lot of them are facing payments that they can't afford. And a lot of it is because they don't have the money to buy the new air conditioner or to keep up with the medication. So they've been charging it.
Mm.
And I've never seen people with this much debt in all my years as I have in the last several months. And so this makes this product more and more important because people, we get stressed over money. Can you imagine? I mean, there's no more hustling for no loan signing. The only way you can increase your cash flow in retirement is by eliminating debt. So
Yeah, so
that's a new one.
I love that. So how do reverse mortgages solve that problem?
Well, it can also, of course, eliminating debt is a huge issue. Most of their debt, or usually the largest payment, is the mortgage payment. So if the reverse mortgage can at least pay off their first or second mortgages, then they have positive cash flow for the principal and interest that they're paying presently, which can really help out, right? Because now if their mortgage payment's $1,100 a month, principal and interest, they're not making that payment now. So their positive cash flow is $1,100 a month. So it gives them that. It can also give them an additional funding stream, right? A security net. It can also really help eliminate a financial hardships that might come, like air conditioners and things like that. It can also help them use the funds to do enhancements on the home. A lot of people think aging in place means, you throw up one of those suction cup things in the shower and that's aging in place accommodations. It is not. You look at every doorway. Can you fit a wheelchair through that? Look at every sink. Is it high enough that if you're in a wheelchair, you can fit into that? Can you get into your shower? Or do you have a step into your shower? These are all the things when aging in place has to be looked at. It is not a suction cup. It is not a little, a walker. You have to make sure you can get your walker around. So, these are a lot of things that reverse mortgage funds can help people. Also can just get them a nice safety net in case they do need it later in life.
I think that aging in place one is so important because people don't think about it until it happens, right? But oftentimes there has to be elevators that will take people upstairs or one of those gliders that goes up the stairs. You
Mm-hmm.
have to put in ramps in the front of the house or the back of the house. It's quite an undertaking. So I'm really glad you touched on that.
Yeah, yeah, aging. I know I had a friend of mine that had got home from a hospital, and I mean, even the little step that was probably 3 inches from her bathroom floor into her shower, she was not able to do. So, I mean, it's a walker. Can a walker fit through the doorways? It's incredible.
Yeah, so much to think about. And I love that this
Yep.
helps solve the problem. So tell us a little bit about how mortgages work, and I'll stop sharing the screen and you can play house with us.
You want me to play house now?
Yeah, let's do it.
Let's play house. Here's my house. And so I'm going to give an example. I'm just going to give like estimated numbers, okay? Because I have my cheat sheet in front of me, but I really can't see it. My eyes are just burning today. So excuse me. So don't hold me to the numbers. Okay. So let's say this is my house. I have a mortgage on it. I owe $200,000 on my mortgage. My house is worth maybe, let's say, 700. I get, and I'm relatively young, right? I'm 62. So I get the reverse mortgage comes, and out of that, I can get $300,000 available to me. Okay. The first thing the reverse mortgage is going to do is going to pay off or refinance my mortgage presently on the home. So my mortgage payment, I no longer make. Okay. The bank, I got 300,000, right? 200,000 went to pay off my loan, and I still have $100,000 left. All right. I'm not obligated to make payments, just taxes, insurance. I can make payments if I want, but I'm a senior on a fixed income, and there's no way I'm doing that. So the interest is going to compound on my loan, my 200,000. Okay, the amount of interest that accrues is going to compile on top of that 200,000 every day, whatever dollar amount it is, based on the interest rate, it's going to accrue. The $100,000 I have remaining, I'm going to leave in the line of credit. If my interest rate on my mortgage is 6%, okay, that's accruing on my debt, right, which is this pile over here, this amount of money, my $100,000 I have left, has a growth rate. The growth rate is also 6%, which means that this little $100,000 that I have here will grow at 6%. Now, if I don't need that money and I leave it there, guess what? It will grow. Maybe in 5 years, in 10 years, I might need it. Or just for an air conditioner. Let's say air conditioner next year it goes out and it costs me, you know, $10,000 for a new air conditioner, right? So I do the forms. $10,000 comes out of my line of credit and goes over to my debt side. So if I borrowed 200,000, I now have $210,000 owed, and I still have $90,000 in my line of credit, plus the growth of whatever has been there. Let's say I win the lottery. Okay, not a lot. Let's just say I win 20,000, and I say, you know what? I'm going to pay back that air conditioner. So what I do is I send in $10,000, right? It's going to reduce the amount of money I owe by 10,000. So I'm back at owing 200,000, right? And that $10,000 also goes back into my line of credit. So now my line of credit is back at $100,000 and still growing. And that's pretty much how it works for the most part. Let's say I want to go move in with Bill. Bill and I, you know what? Bill said, come on, I've been bugging you for 20 years to come live with me, and let's do it now. And I say, okay, Bill, I'll do it now. So I put my house on the market and it sells for 900,000. Okay. Here's how it works. I borrowed 200,000, and let's say, I don't know how, whatever period of time, let's say over the course of so many years, there's $300,000 worth of interest. Okay. So that's $500,000 that's owed. I'm selling my house. The bank gets paid off their 500. The other $400,000 goes to me. So when you think about it, it's pretty powerful because I've gotten to live in this house, not make a mortgage payment for all these years, and I still walked away with 400,000. A reverse mortgage is not equity stripping. We don't give you 100%. We don't give you 90% of the value of the home. It's based upon the age of the youngest borrower. The younger you are, the less money you get. Why? Because we estimate you're going to live to 100. We don't know if you will live to 100 or 120 or even 90, but we have to use a number. So we use 100. The younger you are, the less money you get. Why? Because your life expectancy is longer. Let's say Bill is 70 and I'm 62, and we get a reverse mortgage together on our new home. They're going to use my age because I'm younger and my life expectancy is going to be longer than Bill's, which is not the case. Bill is actually younger than me, I think. Right, Bill?
Just a smidge.
Okay. So, and that's kind of how it works. So I've had clients that have bought a home using a reverse mortgage and then sold it, 4 or 5 years later and realized that they really lived in that house almost for free all that time by the time they sold it, which is very powerful. And that's kind of how it works, Bill.
All right. I love it. Thank you for that. Great demonstration.
Did that make sense?
The
Does everybody
cash
kind
really
of
helps.
see?
Yeah. And I see nodding heads from those who have
Good.
cameras on, and we'll have a Q&A at the end. So if there's a nagging question you have, hang on to it. We'll get there for sure.
Can't wait.
I'm going to start sharing my screen again here so we can get back into this presentation. There we go. So Nina gave us a really good basic overview. These are available to homeowners. It used to be 62 and older, but Nina, they can get in even younger now, right?
Yeah, now they start at 55.
Yeah.
And we also have a new product that has been rolled out, which is, I don't even think you know this, Bill, because I don't think we've talked about it, the reverse mortgage second.
Oh yeah, I heard it was coming.
Oh, it's here.
It's here and out.
I love it. I'm going to get it. I'm going to get one for myself. It goes down to 55. Since I love my 2.5 or 3% interest rate, I think it's three. And my payments, 1,500 a month. I have a lot of equity built up in my house. You can do a reverse mortgage second, so you still make your mortgage payment. The reverse mortgage second is a closed ended, so you get your lump sum at closing, and it's a fixed rate, and you don't have to make payments on it, but you can if you want. It's a great product. I'm very fond of it.
Awesome. All right, good to know. I can't wait to learn more about that too. And as Nina said, there's no monthly mortgage payments required on these. The loan is repaid when the borrower moves, sells, or passes away. And this, I think, is important because it's a misconception, which we'll get into in just a moment here. The homeowner retains title and ownership.
Mhm.
So speaking of misconceptions,
Yep.
uh, Nina, I wonder if you could walk us through the misconceptions
Over the years.
over the years. Yeah. And then we'll get into the safeguards right after that.
Okay, super. Let's do that. So, when the reverse mortgages, I don't want to give a long, drawn out history of it, of how it was started out, but it came out that it started up on the East Coast. A husband passed away. The husband was a gym teacher. Some of the previous students worked at banking, and they came up with this thing called a reverse mortgage. They were able to they gave her a lump sum of cash and said, when you pass, we'll sell the house, we'll get our money back, it will all be fine. So that's the way that reverse mortgages were at first. They took ownership of the home. But what happened was that maybe she lived longer than they expected, or property values dropped. But when it came time, she passed and they tried to sell the house, she was upside down. So what did they do? They went to the kids and said, hey, there's a shortfall. We need our money. And so that was one problem, is that the heirs were getting invoices, or they know that, what, they had to pay. A lot of kids didn't even know their parents had this loan. So it was a shocker. Then there was something called shared equity. The bank went on title with the borrowers. And when the house was sold, if there was $100,000 profit, the bank took 50 and the heirs got 50. That too was not very popular. There was a lot of lawsuits, especially with the first dynamic of the reverse. Of course, it was very unfriendly and a lot of people did not care about it. So when President Reagan was in office, what he did was, there were so many lawsuits, he sent this program to HUD and said, fix it. Just do something with it. And so what they did was they made it into an FHA-based loan, okay, which you don't have to make payments on. So what did that look like? Well, there's upfront in mortgage insurance, just like there is on your traditional FHA loan, and that protects the lender, okay, in case you're upside down. All right. It also protects the borrowers, because if, let's say, the borrower has that line of credit that we talked about, and let's say they got it, and never touched it, and after so many years, they had $300,000 in their line of credit, and the market tanked, and the house is now worth $200,000. Well, you know what? They never got their line of credit cut. So you could have more money sitting in your line of credit than your home value, and they will not cut it. Once again, the mortgage insurance protects the borrower, the heirs, and also the lender. And that's how this product really turned around. It seemed like since that time, anytime something has come up, they've been grandfathered in. If I have a second, Bill, I'll give this really good example.
Yeah, please.
Okay. So what happened was that back in the day when I started doing reverse mortgages, you had to be 62. Both people had to be 62. Let's say I was 60 and Bill is 62. Okay, we want to do a reverse mortgage. Loan officers, and I've seen it and I've heard it. I haven't done it, but I know it's happened. People would say to Bill, okay, Bill, you can still do the reverse. You just leave Nina off of it. And when Nina turns 62, you got to remember to refinance and put her on. Bill's like, oh, yeah, sure, yeah, I'll do that, not a problem. So they went through with it. But you know what? Bill forgot to put me on. And a few years later, Bill passed away. Sorry, Bill. Bill died. And I got a letter from the bank saying that the loan is due. And, do I want to sell it? I was like, what? What's going on? Because I was never put on the loan, he was the only person on title. He passed. The loan is now due. If you can only imagine what a mess it made, which is why they actually in 2017, I believe, they grandfathered everybody in. So in that case, let's say Bill passes today, I wouldn't have to worry. I'm grandfathered in. So anytime something's come up, they have made safeguards to protect people. But here's an example that we're seeing once in a while, not too often. Bill has passed away. I get remarried. I remarry John. All right. Me and John are married and, everything's great. I die. Guess what? John's not on the reverse mortgage. And that is one issue that we still have. But we don't see it very often. But hopefully anybody that has that situation will do a refinance or make sure that, hopefully at that time, the spouse can do a reverse mortgage to buy the house or refinance into their name. And that's the misconceptions. A reverse mortgage is simply just a loan. That's it.
Yeah. And let's talk a little bit about the safeguards that are now in place to protect against those.
Okay. Some of the safeguards is that from false advertising, and it's out there, people might forget to tell, I might forget to tell Pam, oh, guess what? You know what? There's going to be interest accruing on your loan. So there's counseling to make sure, A, that Pam understands that this is a loan. It's just a loan that the interest will be accruing on it until the time she sells the home or she passes. At that time, the loan is due plus the interest that has compounded. It also covers to make sure that she knows what she's doing, which is really a big part of the counseling, is to make sure she's competent, that she knows that she can make the financial decision on her own. So that safeguard is very, very important. Everyone has to counseling. It's a non-recursive loan. You ask, what does that mean? So let's say Bill and I have a reverse mortgage and we pass. And our kid, Joey, says, my parents owe $500,000 on this house. And the value is $100,000 because we're in a down market. Well, what's going to happen then is that the mortgage insurance that's been paid, right, covers the difference. So they no longer go after the heirs. They just sell the house. Now, if our son Joey decides, you know what, I love this house. I kind of grew up in this house. My mom used to knit in that little room up there. I used to sleep down here. I want that house. Well, Joey can refinance this house for 95% of the appraised value. That's called the 95% rule. So Joey can say, lender, I'm going to buy this house. I'm going to refinance it. I'm going to take out a loan for $95,000 and boom, it's mine. That's a beautiful thing. People love that 95% rule. Also the fees. So fees were capped. We can't be charging no nonsense fees on these. Everything is given. We have a small tolerance on them. So if we make a mistake on the fees up front, guess what? We're going to be eating them. We cannot overcharge borrowers. We also have something called financial assessment. Financial assessment just means that you have the willingness and the capacity to make the mortgage payments, not the mortgage payments, the taxes and insurance payments. It's a very simple thing. It works on residual income. If anybody wants to know exactly the formula for it, it's pretty quick. If I make $3,000 a month, my taxes and insurance are $200 a month. I have $100 in credit card debt a month. Well, I only need to have, if I'm the only one on the loan, $600 remaining, which I do easily. Okay. So if we work with residual income, so it's very easy to qualify. If for some reason people do not qualify, we do have other ways of helping them qualify. And that's some of the safeguards there, Bill.
Yeah, awesome. Thank you for that.
You're welcome.
And so this was what's kind of fascinating. There's 16 to 24,000 of these reverse mortgage closings every year. And I mean, I remember seeing a stat when it hit its peak. I think it was like at 32,000.
Mm-hmm.
And I think you mentioned that you're busy. I think industry wide, there's a little bit of a pop for these too, right?
Yeah. I I think we're gonna have a crazy year this year. We anticipate rates coming down. Rates will even go down if we don't get rate cuts. They just generally go down based upon the CMT rate. We do expect, we're seeing more and more of the proprietary products than we are the traditional HECMs. The proprietary products, you can pay off debt to qualify. And on the traditional reverse mortgage, the FHA loan, you cannot. So we're seeing a lot more numbers as the proprietary products roll out more flexibility. We're going to see more and more of those than we will the traditional FHA. But the problem is I don't think, I'm going to have to check the stats, but I don't think that the proprietary products are calculated into the number of case numbers that are given, because on the proprietary product, there's no FHA case number.
Right.
And these stats are gone by the case numbers. So
So
we'll
that
have
gets
to,
even more exciting
yeah, it's a lot
because
more.
there's more.
And I can tell you that this year, I think going by the amount of debt that I've seen that people have, I think that we're going to see a lot more proprietary products.
And for those of you who maybe don't understand what a proprietary product is, it's essentially, Nina, right, like a company, a lender who creates their own reverse mortgage product, right?
Exactly. It and the thing is, though, people are like, well, is it just as safe? It's underwritten the same guidelines as the FHA. The only real difference is that on reverse mortgages on the FHA product, just like on an FHA loan, you're going to have a 2% of the appraised value mortgage insurance, upfront mortgage insurance, and then the monthly. On these proprietary products, the mortgage insurance is built into the rate. So it's a little bit of it's a higher rate, but they also pay a lot more. But they're underwritten, serviced, the same guidelines as a traditional reverse mortgage.
Yeah. Awesome. Thank you for that. Guys, at the beginning of the call too, Nina told you she loves working with the notary community, especially the ones that are passionate about helping this demographic, right? In with seniors. And when you are trained in the full reverse product, but like when you understand what this product is intended to do and how and why it helps seniors and what the process and the documents are like, you can literally change a senior's life just with that understanding.
Mm-hmm.
And then, of course, you have this entire industry of passionate professionals like Nina who just want to help people, and they'll come to trust and rely on you to take care of their customers. Did you know that there are lenders that focus only on reverse mortgages? There's even title companies around the country that specialize in reverse mortgages. These aren't not to some industry players, these are just not one-off hit or miss, like, oh, a reverse mortgage came across my desk. It's all they do. And they're craving notaries who understand this product because here's the thing. You as the notary are oftentimes the only human being that signer gets to see in person throughout the entire reverse mortgage process. Because not all loan officers are like Nina, where they can go to their closing appointment. Sometimes they're in a different state. those loan officers being present at the table is actually pretty rare these days. So understanding what it takes, having the extra patience and the compassion to build in that extra time that it's going to take to do these signings successfully makes a difference. And also to reassure the signers that all this paperwork, it's a stack for reverse mortgages still. We haven't got that narrowed down yet, but you got to be able to let them know that, hey, this is just a normal, valid part of the process. And that kind of experience brings tremendous value to the marketplace. So here's what you can expect at a reverse mortgage loan signing. Of course, Nina, feel free to jump in here anytime
I
because
do want to
I'd love
jump
to.
in, Bill, because I was thinking about something before we go further.
Yeah.
I just want to say something. There is a new product that has rolled out within the last month. Maybe the last month. And I need to get with you because we need to do some digging into this one. But there is a product by a reverse mortgage lender that's doing the signing online
Wow. Interesting.
through Zoom.
Hmm.
So we need to chat about that.
Yeah, we definitely will. My cackles are up when I hear Zoom for those types
Yep.
of things. But yep, I will absolutely. Yeah. And maybe, maybe we'll do another training. I would love to do a training on that the second mortgage reverse as well. And maybe we'll tie this into here. We already
Mhm.
see there's some people who are a Ron agent. I love the idea of finally moving this to an easier signing platform for sure. So yeah, we'll look into that. Maybe we'll have a new training for you in March. Yeah.
Right. But I would not think, and I definitely would not say to title people, oh, can we do this one online? This is for a proprietary specialty product.
Yeah.
So I have to check on it, just so you know, it's not, I have to do some checking on it, but this is something that's come up.
Yeah. We'll take a look at it.
Yeah, let's take a look at it. Okay.
Beautiful. So here's what to expect at a reverse mortgage signing. It's definitely going to be more paper. Some of these signings have 200 to 300, sometimes 400 sheets of paper, and you might have to print out 2 copies of it. And for a few reasons, these appointments are going to take a little more time. Obviously, as I just said, there's a lot more paper involved, so there's a lot of signatures to gather. But also, you're working with seniors that might have some muscle or joint conditions that slow them down with their signature. They come from a generation where there was a lot of pride with their signatures too. So there's oftentimes very lengthy, long signatures, first, middle, last names in cursive. So it might take a little more time to also read some of the important documents. So we always recommend that you block out at least 2 hours for these appointments. But then the really best part of these, if you know what to expect and you build in the extra time, you'll hear some incredible stories and make some very deep connections with people. I've met some of the most interesting people at reverse mortgage signings. They've got stories and photos that are just fascinating. And
Cookies.
cookies, absolutely. In fact, the only time I break my rule of not eating food and drink at a signing appointment is at reverse mortgage signings. I can't turn down the cookies. I've had delicious enchiladas. I've had all kinds of delicious food.
I had a client that made me, when I was there one day, she said, are you hungry? And I don't know, I must have had like, I'm starving written all over my face. And she's like, how would you feel about a tuna fish sandwich and a ginger ale? And I thought, oh my God, that's like heaven. Yes. And now, or usually every 2 or 3 months, I still go see her for the tuna fish and um, ginger ale.
I love that. What a great
Yeah.
connection. So, I mean, here's the thing, guys. For you who came into this business and you truly love being with and helping people and learning from people, being curious about people, reverse mortgages can be very rewarding in so many different ways. And then, of course, for all the reasons that I just mentioned above, you absolutely deserve to earn more per appointment. Now, with companies that understand this process, and when you work directly with either an escrow company that specializes in reverse mortgages or with a lender, that also specializes in reverse mortgages, you can command higher fees, especially with specialized training that we're about to tell you about as well. You should be earning $200 to $300 per appointment if you're going direct. Now, if you go through a signing company that's either not used to reverse mortgages or maybe their client just isn't used to reverse mortgages, they may try to lowball you at first. They may suggest 60. I've seen some for $40 to $100 for a reverse mortgage, but the economics of that just does not add up. So we don't have to jump in and judge it and shame it, but you can't print 600 pages, travel and spend 2 hours with a client and be profitable at $60. It just doesn't make sense. So if you get offers like that, and it's a full reverse mortgage, buyer package, or a refinance package, it would be totally, absolutely acceptable to counter the offer and tell them why. And tell them that you understand what's involved with this. And here's why you deserve more. But this is honestly why I advocate for escrow direct business. And now you know you can market to escrow officers that specialize in reverse mortgages. They're out there, they exist. So when you do find a lender or an escrow officer that specializes in reverse mortgages and they know that you're trained and passionate to help their customers, they're going to stick with you and they're going to pay you what you're worth. Like Melissa says, she's seen more reverse signings in the past 2 weeks. You know, Kim's in California. She pretty much specializes in these reverse mortgage signings now.
Wow, really, Kim?
Yeah, she loves those. Now, one of the unique features of reverse mortgages is they often um, use notaries to help facilitate the application process as well. So more of the front end, the very beginning stages of the loan. So you know, many of the seniors that want to apply for a reverse mortgage, they may just not have the technology ability. They can't just jump online and fill out an application and scan documents and upload documents to start the process. So some of the lenders will actually hire notaries to go out and gather signatures on that application. There's usually no notarizations included in that part, but they just want you to gather the signatures, maybe print out the paperwork, give them some disclosures, collect any documents that they might need. And those can still typically pay out $80 to $100 just for that. And that may not be that exciting, but they're usually pretty simple, a little faster if they're nice and organized, and they don't require any notarizations usually. But what makes these appointments so valuable is that you get your foot in the door and start building relationships, both with the lender and the escrow officer and the signer themselves. So if you strike up a relationship and they love working with you, the lender is going to want continuity in the transaction. So if you came for the application, you did a great job, there's a really good chance that you're going to get hired for the closing as well. So that right there automatically increases the lifetime value of that customer and appointment for you. So maybe you get the $100 or so for the application, and then maybe you get the $200 to $300 for the closing. So it really takes a special kind of notary to embrace and enjoy reverse mortgages. It's not for everyone, and that's okay. But if it does call to you, we're ready for you. Your next steps would be just to join our free community on the school platform. It's called High Performance Notary. This is completely free for you, and it's the most engaged notary community on the school platform. And it has we're over 2,000 notary entrepreneurs now. And I'm going to post that in the chat here for you. So if you're not on school yet, you can join us for free. Many of you, I see the names already. I know that you're already in school. Say hi. Love having you in there. If you're not, join for free. If you're looking for consistency in your marketing, that's what we really focus on. And once you get into the community, if you're called to this work with seniors and you want to be a certified reverse mortgage signing professional, you can enroll in our program by just upgrading to VIP and HPN once you're inside. Or if you prefer, you can purchase the course completely separate. You can do it as a standalone. You can still do that inside of High Performance Notary, or you can simply go to notarycoach.com/CRMSP for the Certified Reverse Mortgage Signing Professional course. And just for showing up here today, for watching the replay of this webinar, it's 50% off. It's usually $199, but you can get it for just $99 today. And that includes the full comprehensive training with sample documents, applications, the closing paperwork, etiquette, the exam, and the best part is weekly continuing education calls with Nina. She does them every Thursday, except for the last Thursday of the month. And you also get a lifetime directory listing as a certified reverse mortgage signing professional on reversenotary.com. And that's all $99. So you can do that right on with the QR code or notarycoach.com/CRMSP or inside the High Performance Notary community. And of course, you just upgrade to VIP to get full access to that. We've also got all the other courses included in VIP. So it's the reverse mortgage course, it's the sign and thrive loan signing course, the World of Apostille course with Judy, the social media and content course, search engine optimization, Google business profile mastery with Jim Allen. All 5 of my books, the PDF versions are included in there too. And every single day I'm in there coaching, teaching, consistency through the daily dues to get you in front of prospects that can hire you or refer you. So that's it, guys. We'll move into the Q&A portion of today's call with Nina. So if you have any questions about reverse mortgages or what we talked about today, or if you're curious as to whether or not a reverse mortgage makes sense for you or one of your loved ones or someone in your network, Nina is licensed in many states, plus she's been in the uh, industry for so long that she has connections and can make pretty much anything happen in all 50 states. So let's open it up. What questions do you have? You can raise your hand, you can type them out. Thank you, Linda. She's got, Nina, you ready?
I'm ready, Bill.
Okay, let's do it. So Linda says, what happens if you pass away? How does this type of mortgage play into you if you have a home in a will? Can you take out a reverse mortgage if you choose to put your home in a trust? Okay, a couple of great questions there, Nina. What do you say?
Yes, you can put in a trust. I will just let you know this is that a lot of times when you want to do a traditional loan, like a conventional loan or an FHA loan, you want to put it into a trust, they just need the trust cert. Okay. With reverse mortgages, they need complete trust to review. But yes, we do close in a trust, not a problem. What happens is that when the last person on title passes, the loan is due. So the heirs will make a decision. Would they like to sell the home and keep the proceeds after the loan is paid? Or if they'd like to refinance and keep it.
Excellent. Great question. Did we get the other one? Can you take a, yes.
And
So
you will
yes,
never
yes.
owe more than the value of the home. So if you owe, $1 million on the loan and the appraised value is 500,000, you know what? It's a loss. If the kids want it, they can get it for 95% of the appraised value.
I think that's a really important point. And you talked about this a little earlier, part of the non-recourse and the 95% rule, but your heirs will never owe more than the home is worth. And I think that's huge because that was a huge misconception.
It was
Back,
bad.
yeah. Yeah.
Mm-hmm. Yeah. It's, and a lot of people don't know the 95% rule. I mean, when I hear loan officers talk, they never talk about the 95% rule. And I'm like, that is like the coolest thing ever. Why not talk about it?
Yeah.
But
I'm glad we are.
me too.
All right. What other questions do we have? 95% rule of appraised value of the current market rate. That's a great question and true, right? 95% of the appraised value.
Appraised value.
So in the example that Nina used earlier, she said that um, because the parents took out a loan with interest when they passed away, it was they owed 400,000, but it happened to be in a market dip where the house only appraised at 100,000. So there's $300,000 owed more than it's worth. But with the 95% rule, the son could buy the house for 95,000. And because it's covered by the mortgage insurance, the insurance company covers the rest. So the lender gets covered, they're paid, the son gets to keep the house, but it's at the appraised value and only 95% of the appraised value. And didn't you say that they do that because of real estate commissions? They want to build in and make sure that there's enough room to cover real estate commissions and stuff like that, closing costs.
It was, yes. And
Yeah,
now they just say 95%. They don't talk
yeah,
about the commissions, if you have a realtor, but you know what, you're not going to make money on it. The kids can get 95% if they want to sell it. Yeah, but it has to be an heir that has it for that 95%.
great question. All right, Linda has another one here. And to be clear, the purpose of this type of loan is for seniors with high debt load. Does the home need to be paid off or still owe the original mortgage? And is it a form of refi? I may have missed the first few minutes. Okay, no
Okay.
problem.
All right.
Worth
So
talking about.
can we run that by again so I make sure I have all my bases when I go over it?
Yeah, well, I'll ask one question at a time.
Okay.
Is this type of loan just for seniors that have a high debt load?
No. I will say that the majority of my clients have little or no debt. They want an extra funding stream or an extra bucket for retirement years, whether they're planning for retirement and want this bucket of money that the reverse can give them in the line of credit to grow for 10 or 15 years. That's one thing. I have some people that do it to eliminate debt. Yes. But it is not for just the house rich cash poor at all. This is a financial tool
Yeah.
that helps people, um, you know, increase their cash flow.
And I'll piggyback on that a little bit too, because I know some of the financial advisors that you work with and some of the ones that I've talked to about this product, they actually recommend it, whether somebody needs it or not, because when you need it is usually when you're not going to get approved for it.
Yeah.
So it's
Mhm.
like, they're like, if you let's set this up right now, it's a line of credit, or it can be a line of credit. Then when it's there, it's an
It's
extra
never cut.
couple hundred grand just sitting there if something happens, especially like a lot of people are relying on the stock market for their retirement. So if they need to take out their retirement money or their 401k or whatever it is in a down stock market, it's painful, but they could draw from this instead of and then wait for the market to come back up to take out on their stock investments. So it is a true financial tool.
People take out a reverse. I'll give a couple of other examples. People take out reverse mortgages so they can push out taking Social Security,
Yeah.
because you do know that your Social Security increases every year that you don't take it. So people take the reverse mortgage money, right? Knowing that you'll get 9% more if you wait for your Social Security, as opposed to the 5.5% that you might accrue on the amount of money you're using from the reverse to push out your Social Security. That's one thing people do. I have a financial advisor who's a tax guy. And his thing is, he says, you need to know your tax bracket when you convert your 401k or your IRAs. We don't know what that tax bracket will be when you go to take it. It's going to be more than it is today. So he has his very well off clients take the reverse mortgage to convert their IRAs to a Roth now, and they'll make payments to their reverse mortgage to get the 1098 interest write off. Savvy.
Freaking amazing. Yeah, savvy business tools. So there's a lot in there. For sure. Okay, so the second part of her question is, does the home have to be paid off,
No.
or can they still owe on their original mortgage?
Well, there's a couple things. Number one, let's say you have a mortgage balance of $100,000. The first thing the lender will do is to refinance, consider that a refinance, and pay off your first mortgage. Now you have eliminated your mortgage monthly mortgage payment of principal and interest. You'll just be responsible to pay the taxes and insurance. If you have a first mortgage and your interest rate is low and you don't want to give up your 3%, then what you can do is you can look at taking the reverse mortgage second. That would be a second mortgage. But I can tell you, I have seen it lately. People that have a lot of debt and paying 27% on a credit card of, $70,000 or $80,000, and they want to keep their little mortgage payment because it's 3%. The numbers there don't always make sense. Of course, they'll tell you that you'll never pay off your credit cards at 27%.
Yeah. Um, and you mentioned that this is kind of a refinance product, but I think this is a really good opportunity. And this is one of the biggest misses, I think, especially for real estate agents and in the market, is reverse for purchase. Can
Yeah,
you
yeah.
just touch on how this program works?
I love the reverse of purchase. Here's how it works in a quick nutshell. Taking my house back. Hang on, where's my money? Did I lose my money? Okay. So I think I lost my money. Shoot. Oh, here it is. I hid it like a smart person I am. Okay, I got to get up really early just to even beat myself. Anyway, so let's say I want to buy it. Let's say I just sold my house in California. No pun, nothing against California. And I got $500,000 in my hand. I go to my real estate agent, Pam, and I say, Pam, I want to buy a house, and here's a list of all the things I want. And Pam is kind of chuckling in the back of her mind. And I say, Pam, I have $500,000 to spend. And Pam's thinking, that's not a $500,000 house. You got to be kidding me. That's a $700,000 house. But she says, you know what? If only you, now this is exactly how my realtors handle it. If only you were 55. And they say, oh, Pam, come on, I'm 80. And she says, oh, did you ever hear of something called a reverse of purchase? And they say, no. And Pam says, okay, you hang on. And Pam calls me, Nina, I'm like a wind up doll, right? When I see Pam's name on my phone, I know exactly what she wants. This happens to me every Sunday. Hi, Pam. Hi, Nina. I'm sitting here with Bill and Linda, and they are interested in learning about how reverse purchase works. Okay. They love this house at 700,000. They have $500,000, right? Now they're older. Okay, they're 80. So I say to them, well, here's how it would work. You would come in with $400,000, and our reverse mortgage loan will give you 300,000, right? So they're going to come in with 400,000. We're going to give them a loan for 300,000. That makes a total of 700,000, right? Everybody got that? Okay. They're like, really? Pam's like, my commission just went from 5 to 7. Woo-hoo. But she's keeping her game face on, hoping that they go for it. So let's just see what we just did. They go through it and they buy the house. They just put $400,000 in on the house that they loved, that had everything they wanted. And they still have no mortgage payment, which was their goal, not to have a mortgage payment, just pay the taxes and insurance. They've achieved their goals of their dream house, and they also have $100,000 left over.
That's huge. Keeping your cash.
Mm-hmm. Once you put money into your house, the only way you're going to get it is going to do a cash out refinance. And no matter what the market is, you're always paying highest rate for a cash out refi. So that's kind of how the reverse purchase works.
It really improves your buying power.
It does.
Yeah. I got a friend, Nina, in Phoenix, that I'm telling them, I'm like, you've got to do a reverse. Please do a reverse. Because he's kind of in this phase. He's got plenty of cash, but he doesn't know how long he's going to live. So he doesn't want to spend it, but he wants to buy a house and he's thinking he's going to rent a room. He wants me to go in and buy a house with him. I'm like, dude, just buy, get a reverse, double
Will
your
he use
buying
me?
power. Yeah,
Is he going to use me?
absolutely. Heck yeah. Heck yeah, you know.
You
Yeah.
just you,
So
you just saved
just
my life.
so yeah, great questions there, Linda. So thank you for sparking that great question. Now here's another one from Andrea. How long does the process take once the application is submitted? And what are the credit score requirements? Maybe you can ballpark that for us. And then there's a second part I'll get into after that.
Okay, so the process, it depends what state you're in. Let's say you're in the wonderful state of California. I do love California, so I'm not knocking it, Pam. Okay, so if you're in the state of California, some states have a 7 day cooling off period after counseling. California is one of those states, which means that we cannot order an appraisal or anything until 7 days after. I would say 30 days. If the clients get you, if you get the paperwork needed and everything, you're probably looking at 30 days, could even be sooner. I've done some in 15 or 20, depending how clean the file is.
Wow.
Okay, so it's relatively quick. You have to just do the counseling, and if you're great about getting the paperwork, it could be super fast. All
And
right.
oh, I'm sorry, go ahead. You're rolling right into it. Credit score?
Okay, now what was the second?
The credit.
The credit. Okay, so a reverse mortgage is underwritten a little bit differently than traditional loans. This is going to take a minute, Bill. Do we have it?
We have plenty of time. This is Q&A. All you.
Okay. Okay. So we are not credit score driven. All right. We don't really care about credit scores. Depending on what the credit is, I'm going to give you an example. I'm going to use myself. 3 years ago, I was very ill. Okay. Being a single income household, my credit went to the dumps, right? I I've been trying to get everything caught back up. I'm back at work now. I'm doing better. That's behind me, but my credit is still reflecting it. I want the reverse mortgage. I apply for the reverse mortgage. I tell my loan officer, I say, hey, they say to me, well, what happened here? You were great. Everything was perfect. And all of a sudden, 3 years ago, what happened? I say, well, I was very ill. Well, if I can provide documentation showing I was ill and unable to work, or there was a good reason, if I was laid off during COVID and I couldn't work and I couldn't get a job, if there's a valid reason, there's not a problem. If, let's say, I co-sign a car loan for Bill and Bill has decided he just, not going to pay it anymore. And I say, I'm not paying that. That's Bill's bill, not mine. Well, I co-signed. It's my responsibility. I'm as responsible as Bill. And the lender says to me, okay, you have this loan that's a charge off now. What's going on there? And I'm like, well, that was Bill's loan, not mine. I'm not responsible. And they say, oh, yes, you are. That can cause a problem. Here's what happens. If you have a valid circumstance and we can write a letter and show documentation, not a problem. If it was because Bill did a doozy on me, and I really, other than just saying it wasn't really my bill, the lender will look and put on a life expectancy set aside, which is called a LISA, LESA. And I will say that a lot of my students, when they sit at the signing table and the borrower says to them, I thought I was getting $200,000 and it looks like I'm only getting 90. What's the thing? My students will look at it and say, oh, you have a life expectancy set aside. Life expectancy set aside is when the lender says, we're not totally convinced that you're going to be able to pay your taxes and insurance consistently. And not paying your taxes is the only way you're going to lose, or you could get into foreclosure. So what they do is that if you're going to have $300,000 left over, right, the lender will do depending on your age, I'm going to use 144 months because it seems to be the magic number of what taxes and insurance would be. So if your taxes and insurance were, every month $100, right? 144 months would be 144,000. They're going to put that in a kitty to set aside to pay your taxes and insurance. If you have the equity, it's not a problem. I see people who are going into foreclosure who have a ton of equity in their house and can pay off the mortgage and get a life expectancy set aside and keep their home.
Yeah.
There is really no reason why you cannot get a reverse mortgage pending foreclosure, pending bankruptcy, as long as you have the equity in the home.
That's the biggest jam up is just not enough equity, right? Given
Yeah.
the circumstances. Yeah,
Yeah.
great question. So also, so her final follow-up here is, what if you receive Medicare or other benefits? Is any of that affected?
Medicare, no. Um, if you get if you get like food stamps, it might impact it. Remember, this is equity from a loan. It's not income. It's not income. It's just like doing a cash out refinance from your house.
Great, great questions, guys. And Nina, I put your contact information in the chat. So if anybody has maybe more personal questions about whether or not, especially if you're considering a reverse mortgage for yourself or somebody in your family, and if you want to have a more of a private conversation with Nina about this process or start an application, you can reach out to her directly.
I mean, we do have lenders that are more. I will say this is that there is one or two lenders out there that is a lot more flexible than anybody else. So you know what? They are trying to fill niches. But I have to say, our underwriting is really pretty lenient. I mean, a lot of people look at as one charge off as just a fluke.
Yeah.
So yeah.
Pam asks, is there an average fee for doing the application? So Pam, are you asking about the borrowers? Is there an application fee? Or are you asking paid by notaries going out and collecting signatures? Oh, hold on. I think I have to give you permission here. There you go. Sorry. Come on up, Pam.
So I was curious because I had gotten from a signing company a request to do an application, and they only want to pay $60, which I thought was too low. And I know it depends on if people have their act together and that kind of stuff too. So I was just curious.
Yeah, well, there's not like an industry
Right.
norm on this, but there's no reason that it should be less than 80 to 100. Again,
Yeah.
we're in the industry, this time in the industry when all these signing companies are on this race to the bottom, like undercutting
Yeah.
each other's fees, and we're the ones that end up paying the price for those. So is
Right.
$60 worth going out there? Here's the thing. These are relatively simple in my experience, but when they go wrong in a big way, right? Like people have, they're digging through filing cabinets from
Mhm.
1975 in their garage while you're at the appointment because they haven't been prepped right. They've told you even on the call that they were prepared, but they're not. They don't know what they're getting into. Sometimes I've gone to one and they're like, what is this? They just said somebody was coming to my house. I don't know what's going on. I'm like, oh,
Mhm.
well, I think we're done
Yeah, and
here.
that's I'm not sure with signing companies sometimes.
Yeah.
If I can
I
chime
mean,
in, what I would do, I mean, because it happens to me, if I go see clients and I take the application from them, I'll be like, oh, I need your Social Security
hmm
award letter or your benefits letter. And like, oh, from the beginning of the year? I say, uh-huh. Oh, okay, hang on. I'm sitting there just trying to entertain myself for 20 minutes.
Yeah.
And they come back and they say, I can't find it. Okay, bank statement. Okay. Okay, here you go. They give me the first page. I need all pages. Oh, hang on, let me go.
Yeah.
So what I do is before I go see them, my clients or whomever, I say, listen, do you have the paperwork? I take the big ones. Do you have your Social Security award letter? Yes. Do you have 1 month bank statement, all pages? Yes. I know those are the big ones. Income documents, Those are the big ones, because you know what? Nobody, and a lot of people who are seniors don't want to send you their social security award statement, their bank statement. If they want to send it to you, they want to take a black marker and mark out the account numbers, and that's no good. We can't use them. So you know what? If you're going to go do the application, at least set yourself up so
Yes,
that
I
they
mean, I
get.
don't know how if they're told what they need, you know.
On the proposal package, there's a list of a lot of paperwork, but I mean, if you just know the generic stuff that you need, which would be driver's license, a copy of the driver's license, just even the front. If you can, social security cards. Income documents would be social security award letters for the current year, 1 month bank statements, all pages of where the social security or the money goes into.
Hopefully that type of information is on, if I was to accept
Yeah.
this, would be on
Hopefully,
that.
absolutely, and it will be, because that's part of the expectations of the
Right.
job
Yeah.
that they'll want. So again, pricing and whether or not it makes sense is going to be different for each person, but I will
Right.
say that $60 is definitely on the low side.
Yeah.
But again, if it's right around the corner, if they're
No.
prepared, you might be in and out there in 15 minutes, for $60. So you guys get to decide that.
Yeah.
But
Right.
at my
Thank you.
signing company, we never paid less than 100 for these types of appointments. And I know it has so many other factors that are dependent on that. But I mean, Nina, as a loan officer, if the deal's not going to get done because they can't get online, paying somebody 100, $150 to go out there and collect signatures, it's worth every penny,
Mm-hmm.
right? Every penny, Nina Penny. All right, guys,
Waka, waka, waka.
we're going to wrap it up here. This has been an amazing time. Thank you so much. It's almost been 80 minutes, Nina. Thank you
No
for
way.
sharing your expertise and your passion for what you do. And for those of you who showed up, 50 of you on today's call, a little over 50.
Do we still have 50, Bill?
No, we're down to 31. They're dropping
Wow.
like flies.
Thanks, everybody.
80
I can't
minutes, I
believe
know.
it.
But thank you for sharing your Friday morning with us. Like I said, if you want to join us in school, I welcome you to do that. We are looking for those who are hungry to build their business. We've got the consistent methodology in there for you. And if you're interested in weaving reverse mortgages and your passion for helping seniors into your business, upgrade to VIP or purchase the standalone course, the Certified Reverse Mortgage Signing Professional Program, when it makes sense for you. And also reach out to Nina Penny if you have private questions, nhpenny@msn.com, or her cell phone numbers in the chat for those who are on the live call. And of course, I'll send
Yeah.
this out
It's
in the show
best to
notes
always text
below.
me. That would be the best way, because sometimes if you email me, it might go to junk. And some days I have 200 things in my junk and I just delete.
Yep. Perfect. All
All
right.
right.
Thank you guys. Have a great
Thanks,
weekend.
everybody.
Thank you, Nina. Love
You're
hanging
welcome,
out.
Bill. Thank you. Bye, everybody. Bye,
Bye.
Pam. Bye-bye.